Okay. Yes. How are we? How are we, guys? Hope you all are doing good. Uh, I hope you are all enjoying the summer um, and are not doing too many hours in front of the chart. Don't forget to enjoy life, enjoy the weather, enjoy your company, enjoy your family, and all of it. I know it's easy to just disappear in the charts. Try to find a balance. But here we are. Another trading recap. We will go through two trades. Both of them I did lose. So we have two trades, two losses. One of them was on GBP USD. This is the one we have in front of us. And the other one was on gold. So let's go through them. So basically, first one, GU. If we just so we are here, and we can see that we are in a bearish trend. And in my weekly analysis, I did say that I wanted price to come up to this bearish order block, supply zone, whatever you want to call it, and then anticipate or see on lower time frame if we can get in a entry, right? So from this high to this low, we do have this 0.79 as a very beautiful target. So why? Because we did have this area. If we go down to H1, where price consolidated, and then we saw this huge bearish impulse, right? This massive move. So I was a little bit greedy when I see how it all turned out, because it wasn't exactly as good as I made it to be in my mind. I was a little bit greedy. So price tapped into this supply zone, this area of interest where it started this whole plump. And then if we go down a lower time frame, we can see during London we tapped into this area, we came down, took out that London low, and since we took out that London low and closed below on M15 but on H1, it wasn't really anything. We were just tapping into this bullish order block. But the reason why I wanted to take shorts was solely because price is above equilibrium, so we are in a premium on a big one, and we haven't really made a shift in market structure until this low is taken out. Why this low? Because this low is the low that started this push up, right? And we do also have some Asian low liquidity down here. So with that being in my mind, honestly, I didn't even have this in my mind. It was just I marked this as a break of structure, and then I was targeting. I wanted to find an area of interest where I could find an entry, and this inverse fair value gap was my target. So I set a sell limit on this area, and I wanted to target the low of the lows. So I did some mistakes here. One of them is, first of all, I need to see a correct breaker structure. This is not a breaker structure, and that's number one. And two, we need another confirmation in the form of EMA, where we can see EMA. We want to make a solid shift to market structure, solid breaker structure, and at the same time we want to see price being below the EMA. Now I did miss, honestly, that this was an imbalance. So what price did is that during London kill zone we were below this moving average, which is on the M5, right? So yeah, the reason also why I took that, because we did tap into our last POI, our last point of interest, our last internal range liquidity, what I forgot to say. So the only internal liquidity that was left in this range was this imbalance and this bearish order block, which we tapped into. We even came and tapped into the equilibrium, and yeah, we got a small rejection. And then what price did was we tapped into it, and then there were news at 10, and then we got this, we took out that previous weekly high. So we did take out this previous weekly high wick. Yeah, this is all yes, very noisy if you don't know how to read price, but yeah. So we were bearish, we did close below, and then we tapped into this bearish order block, and then we took out that previous weekly high, and then we just plummeted. Right, so yeah, this was a loss. What could I have done better? Honestly, I don't want to use the EMA too much, but it's a good sign to maybe get a confirmation, but I don't want to use the EMA too much. But this, I could say, is not a actual breaker structure, not when we also have imbalance in between, and this low hasn't even made a higher high. So this was all liquidity. We feel this imbalance, we got this reaction, took out that previous weekly high, and then we got this huge sell-off. For me, price is now ready to head down. So that's that. And then the other trade that I lost on was on gold. for me we are bearish on multiple time frames, so I did lose here. And why I did lose was because my high time frame bias is still that we should want to get to a higher premium array from this high to this low, and then right. So the reason why I took this trade, let me just, yeah, so this is what happened. I took a long. Why? I saw that on the H4, very important, on the H4 we rejected after we took out that Asian low. We closed higher if we look only on the bodies than these two, which was for me which was a bullish sign. So I wanted to look for longs because we have swept sell side liquidity, and we do have some buy side liquidity resting above here. This is the previous weekly high. Yeah, this is the previous weekly high, which I want price, or which I anticipate price to target these highs. Previous weekly high. So here I did exactly. So when price came back to this H1 bullish order block, I took a long, and the reason behind it was because I knew the price had swept sell side, but we still had buy side above, right? So this would be a good 2.5 risk reward. Very solid, but we can see the price did get a small rejection, and then we just plummeted, respected this high, this low, and have since then started to push up. Then I wanted to take another trade. I wanted to see price to disrespect this imbalance, and then use it as a support, but since it was after the kill zone, I didn't want to take it. So, and we can see that we are slowly moving towards our buy side liquidity. So yeah, so I did take another loss here. So 2 trades, 2 losses, nothing too crazy there. So yeah, that's that. This is my market recap. I'll see you guys maybe tomorrow. Take care.